Hello traders, Chris Capri, Second Skies Trading. So new video for you here on trading breakouts. Trading breakouts is a super important skill that you're going to have to build. And I'm not talking about trading breakouts in terms of, some sort of BS candlestick patterns. I'm talking about being able to read price action in a particular structure that will tell you when there is a high probability breakout coming. And so what we're going to do in this video here is we're going to go over some of the key variables you're going to want to look for in this particular pattern, what you want to look for in the price action, how you want to understand the order flow behind it, and how you can use that to find high probability breakout trades. So we're going to go over a few variables, then I'm going to give you some examples of breakouts, and then I'm going to give you some simple tips that you can use for trading breakouts. This pattern for trading breakouts is something that happens on any instrument, any time frame, any environment. So it's not restricted by time frame. It's not restricted by the market. This works in Forex, stocks, commodities, futures, global indices, everything across the board. So I'm teaching you a skill that you can apply to any market, any chart, any time frame. The first characteristic that we're looking for in spotting this breakout pattern is we're looking for a with trend move. Silver has been pretty, let's zoom out a little bit, it's been pretty bullish for quite a while. I'm long at 1652. Here we are in mid 18s, but it broke up, formed a large corrective structure pattern, then also broke out above that, and then formed a really nice breakout pattern setup here. And so we're going to zoom into this. And so the first thing I wanted to be doing is trading with trends. So we're in a bull trend and we got that. The next thing I'm looking to do is I'm looking to spot a well-defined key support or resistance level. For bullish, we're looking for a key resistance level or a well-defined resistance level. And if we're bearish, we're looking for a well-defined support level. In this case, for bullish, what we have here is we have a resistance level that has two particular touches on it. And this aspect of looking for two touches on a resistance level is important. So first I'm going to define what I mean by the two touches, and then I'm going to talk about why it's important. So when I talk about two touches, I'm not talking about like the market comes in 1 hour and then the next hour touches it again. What I'm talking about is the market touches a particular level, has a reaction off that level, and then comes back to that level. Why is this important? Why do I need two touches where the market hits it, pulls away from it, and comes back to it again? The reason why I want two touches off this resistance level is that by the market pushing off of it, it tells me that there are bears that are defending this particular level. I mean, we've had a very strong bull trend. It goes from 1693 to 1776. It's about an 80-cent move. And then all of a sudden it drops about 25 cents. Now that could be some profit taking, but it also is more likely that there are some sellers parked here, that they're able to stop this momentum of the bulls and push it back. And so this is important. By having this reaction off it, it tells me that there are orders, or in this case, sellers that are parked here. The bulls try and attack it again, and then we have another reaction. So we have two touches and two reactions. This is very important. By having these two touches and then having two reactions is a communication that there is order flow parked there, in this case the sellers, and they're trying to defend this level. We want to be trading with trend. That's the first key point. The second key point is we're looking for two touches and two reactions off that level. The double reactions communicates to us and to you as traders that there are counter trend players who are pushing back against this with trend move. That's important because if there are orders parked there, then when a breakout does happen, it's those orders that are going to get stopped. If they're short, then to get out of the position or get stopped out, have to take a long position, which helps further fuel a breakout trade. And so that's why this two touches, two reactions off of a key support and resistance level is very important, because the mechanism of those orders being there, being counter trend, is also the same mechanism that helps to kind of extend or amplify the pressure of the breakout. If the bulls are wanting to break out and move higher and break above a key resistance level, they're going to do it. But if they have counter trend players that are going to get stopped out there when they do break out, that creates more power in the breakout. Also, this is all, I'm saying all this with the understanding that you have some sort of basic understanding of order flow, that directional moves do not happen in the market unless there is an imbalance in the order flow. So bullish directional moves do not happen unless there are more bulls in the market and they're coming in with more volume. For bearish moves, there has to be more bears in the market and they have to be coming with more volume. So that's really what I'm talking about when I talk about a breakout trading with trend and 2 touches on a key support or resistance level. The third component that I'm looking for when I'm wanting to trade this breakout pattern is I'm looking for weaker reactions off of the level. So let's look at this. We hit the resistance level at 1776 and it goes to about 1753, so about a 23-cent drop. We come right back to this level and then look at the reaction. It's only about 13 or 16 cents now. So from 76 to 53, from 23 cents, and now we're getting about a 16, 17 cent reaction. So it's a weaker reaction. Why is a weaker reaction important to me, especially this progression of decent reaction, weaker reaction? Why is this important to me in terms of this breakout pattern? Weaker reaction tells me 2 things. One, the bulls are gaining strength over the bears. They're coming in at a higher place. The pushback from the bears is weak. And so the bulls are coming in at a worse price. If they come in here, that's a worse price than coming in here now, isn't it? But they're willing to do that because they're just keep pressing further and further and exerting more force over the bears. Kind of like a tug of war, the bulls are winning because they have more force. That's how tugs of war work. The side which has more force and leverage is the one that wins. And that's the kind of underlying mechanism in a breakout. In this case, decent reaction, weak reaction means that this tug of war, the bulls are winning. So I'm looking for weaker reactions off the level. And ideally that continues in a progression. So if I have, say, a 25-cent rejection, then the next one should be less than 25 cents. And then on any other reactions should not be a stronger reaction, they should be a weaker reaction. That's the most ideal scenario. But I want weaker reactions to happen because that tells me the bears' ability to defend this level is weakening. They're losing this tug of war battle. So if you have these 3 things in place, you have a clear trend in place, you're trading with trend. You have a clearly defined support or resistance level, in this case resistance. You have 2 touches off that resistance level, and then you have weaker reactions. So first reaction and then a weaker reaction. Then we have the conditions in place that are setting up for a high probability breakout. When I see this, if I'm already long, then I might look to add my position on the breakout. If I'm short, then I might look to exit my position early to avoid taking a loss in this one here, because it's telling me my side of the market is losing this battle. When you have all these conditions in place, you should be thinking in your mind, the probability that a breakout is going to happen here is very strong, and I need to take advantage of this. So let's go into some examples of this. We see this here in silver. Once it did clear the resistance level, went for a nice it went from 1776 to about 61. So what is that, about an 80, 90, 85 cent stop? Super. I mean, for a day trade, that's a really, really good trade. That's a really profitable trade. But let's look at a few more examples of this here. So that was silver. Let's look at pound Swiss. This is something we've been talking about recently with our members. So we have a bull trend run here. We have a decent reaction. Market tries to get up there, fails to, produces a new low right about 1824. So resistance is at 1936 and 1824. Bulls come in again, come right back to the level, and then look at the reaction they produce here. Much weaker, not even close to this low here, and not even close to this one here. So now I have a couple touches and I have a weaker reaction. Then look what happens as the market gets closer. The bulls are winning the tug of war. Look at the reaction, very weak. They can just only get a little bit off of this here. And then boom, market takes off, clears 1937, goes to 2067, so it's about 130 pips, and it does this in a matter of hours. So it's a really explosive move. This is a chance for you to be grabbing 100, 120, 130 pips in just a few hours, and you're done for the day. This is a super profitable pattern when you learn to spot this. Let's look at another one. Let's kind of pick on the pound Swiss a little bit more. I'm picking on the pound a lot recently, which I've been talking with my members, because the whole Brexit situation is just really weak right now. A lot of people don't want to be invested in the pound with the uncertainty, and you just see it in the charts. The pound is just losing ground across the board. So we're seeing a similar breakout pattern manifest in real time right now with the pound Swiss. So we have this bear trend in place. Here's the bear trend. We have a support level here, bounces, kind of goes sideways a little bit, and then boom, hits the same support zone again, bounces, produces same reaction. So we have three reactions that are, or three touches at this resistance that are the same. By the way, notice this here, support, breaks through resistance, acts as, or breaks through support, acts as resistance, comes down here, treats it as resistance. This is called a role reversal level. So the market bounces, hits the role reversal level, and then it hits it again, and then it sells off, finds this support zone. Now this reaction makes it the same way, or back to the same point, same price. Then look at this next one here. It probes deeper into the support zone, and look at this reaction. It's about half the distance. So now we have our first, we have a couple touches here, 3 touches, and now we have our first weaker reaction. Then the market gets close, produces a lower high, and now probes deeper into the zone. So what I'm watching for on this one here is, if it bounces from here, as long as it doesn't make a new high, then I'm okay with this pattern still being in play. The most ideal situation is that if for the bounce from here doesn't make it as high as this, and continues to pressure down. If it does, that will communicate to me that there is a possible breakout happening in pound Swiss. So let's look at a couple more examples here. Pound yen did one recently, 1 hour chart. Bear trend in place, hit a support level, bounce, bounce. Here's the first real pushback on this one here, goes to this prior resistance level, kind of hangs out here for a little bit, revisits it again. So now we've hit it again, but then look at this reaction. It's a weaker reaction, it's a lower high. Then we get back. Another weaker reaction, and then we get back an even weaker reaction, and then boom, market breaks down, goes from 128.20 down to about 26.70, 60, even down in the 50s. So you're talking about 160 pip breakout in less than a day. Really profitable trade when you can capture these in real time. Super important. A couple more here. One forming in BBB, Borussia Dortmund. This is the stock for that one here. Bull trend in place. Find a resistance level. Here's the pullback. Resistance at 1030. Pulls back to about 7. Building higher lows, higher lows, higher lows. What I'm waiting for is for a second touch here. Weak reaction to not go as low as this one. And then for this to just kind of continue to squeeze and then look for a breakout on this one here. And then one more. Amazon 5-minute chart. This one's a little bit different. It's counter trend. There was the short-term trend leading into this was bear trend. And then we formed a large corrective structure. We had a resistance here, higher low, attacked the same level, slightly higher low, almost as high, slightly higher low. Now we're attacking it, and then look at these highs. Weaker reactions, weak, weaker, and then massive breakout for a good, was that almost $40 move in Amazon? You can see this pattern playing itself out over and over again. And to just test it out, look at charts historically. Go back in time. Go back 10, 15, 20 years. I've gone back as far as 100 years, and this pattern works out just as well as it did 100 years ago as it did today, because it functions upon the basic kind of mechanism of price action and order flow. So now that we've gone over some examples of this, let me give you some simple tips for trading it. And let's start with silver here. So going back to our silver example, first tip I'm looking for when trading a pure breakout is once I have the weaker reactions in place, I'm going to wait for the market to clear the highest price in the breakout. The reason being is that if somebody's short here and they see this breakout pattern, more than likely a really smart trader is either going to trim his stop and bring it really close to this, or maybe they were someone who was already short and had their stop just above this. They shorted here, they felt like this was going to hold, have the stop just above it. And so once the market clears it by a few pips or points, then I'm usually looking to get long in real time. And the reason being is that if the order flow, if I'm reading it correctly and the bulls are going to, winning this tug of war, they should be tripping those stops very, very soon. And once those stops are tripped, there's really no defenses left on the bear side of the market, and that creates a quick, explosive move. So you want to be getting in as close to the breakout level as possible. If you wait too long, then you're kind of ruining your profitability on it. You're farther away from where the kind of explosive movement is going to happen. You reduce profitability, you have a worse entry. And so I try and get in as close to this as possible. And so that's kind of the first tip. The second tip that I'm looking for is, in terms of placing my stop loss, this is pretty straightforward. I'm looking at the last 1 to 2 reactions in the pattern. And what I'm doing is, so here is one reaction. Here's the most recent reaction, it's super weak. And so I kind of mark the low here, just below that. So that's one option in terms of placing my stop. The other option is that I place it below the second weakest reaction. And so here's the second weakest reaction. I put it a few points or pips on the other side of that. And that's pretty much it. That's what I'm doing in terms of placing my stop loss. I want to do that because I want to get as close to the breakout level as possible, but I also want to know where is it that the bulls who kind of started this breakout pattern, where did they really come in with force? And if a weak reaction was here, and this is as far as the weakest reaction got, then I want to put my stop loss below that. If I want to be a little more conservative, I go to the second weakest reaction and put my stop loss below that in this case. And so that means that the bulls who are, continually buying into this, they're going to defend that. If you're trading a breakout to the downside, you just flip it. You put it above the first weakest reaction or above the second weakest reaction. Pretty straightforward on this one here. And then in terms of my target, I'm going for a minimum of plus 2R. So let's say you took the weakest second reaction. Let's say you got in, including spreads, 1778 or 1779. So you're in at 79 and your stop loss is at 60. So you got there's a 19-cent stop loss and you're in at 79. This thing went all the way up to 1832, which is what is that? That's 56 cents on a 17 or a 19 pip stop loss. It's about a plus 3R on that one there. And so even if you took the second weakest reaction, you're getting about 3R on this one, and you're doing this in less than a day. So if you risk $1,000, you just made $3,000 profit in less than a day. Super profitable pattern. Let's look at a couple more. Let's look at the Amazon one. Actually, we can do pound yen real quick. This one's super easy. So here's the breakout area. This is the lowest point in the breakout. So I want to be getting a few pips below that. That's 128.12. So let's say I'm getting it at 09. So I'm getting at 28.09. The weakest reaction here is 78. Goes to about 76. So I'm putting my stop loss at 78. That gives me about a 69-cent stop loss. And this thing went for a total of, 145 pips? About 145 pips. And I had, what is that? I got in at 79 minus 9 pips because I'm in at 128.09. So 70 pips stop loss and 145 pips. That's a plus 2R right there. Let's do the Amazon one. And here we have two really good reactions here. So here's the highest point in it. This pullback here goes to about 80.25. So I put it at, say, 79, and I'm in at, say, 94. So you're talking a $15 stop loss, and it went all the way up to 28, which is about $38. So it's about a 2.5R on that one there. So again, a very profitable trade. Again and again and again, you're going to see this pattern play itself out and continually work out in terms of the price action, in terms of the order flow, in terms of the stop loss and take profit. Super straightforward, super easy to trade in terms of breakouts. To review all this, we've kind of gone over a lot. To remind you, first thing is you want to be trading with trend as much as possible. I wouldn't recommend trading counter trend breakouts until you've done maybe 100, 200 trades of this and you have a pretty good track record of doing it. That means you understand the mechanics of the breakout. You don't really have to think about it. It's all subconscious at this point. And you've also built up a lot of experience and database in terms of really profitable trades, so you know what really good breakouts look like. When you have that combined with other good skills in reading price action context and the order flow behind it, then and only then would I recommend doing this counter trend. So in the beginning, trade with trend. The second key point is that you're looking for a well-defined key support and resistance level that has had a minimum of 2 touches off that. The third key point is that you're looking for weaker reactions off that key support and resistance level. From there, you're going to trade the pure breakout. You're going to put your stop loss below the last 1 or 2 weaker rejections, and your general target is going to be 2R. Now, with that being said, I hope you enjoyed this video. If you'd like to learn more videos or articles about this, check out our website, secondskiesforex.com. We got a ton of free trading lessons and videos, free beginners course. We got over 1,000 articles and videos here, a lot of free material for you to learn from. We also do trade ideas regularly throughout the week. And if you'd like to learn more advanced or kind of subtle nuances on how to trade breakouts, how we trade them on a more detailed way, then check out my advanced price action course, where you're going to get access to 50+ hours of video lessons more in depth than this. You're going to get access to our members trade setups channel. So traders from thousands of traders from all over the world are posting their trade setups in real time. You get access to that. You get access to our daily trade ideas and market commentary, and also a weekly member coaching session where once a week, every Friday, we work with our members we talk about trade setups we're looking at, analyze charts, and answer everybody's questions that they have about the material and trading. We get into everything. It's really a chance for you to get some ongoing trading. I hope you enjoyed this video. Make sure to Hulk smash that like button and subscribe to our channel. It really helps us out in terms of the YouTube algorithm, and it allows us to continue making free videos like this to help you with your trading, help take your trading and advance your understanding of trading stocks, forex, commodities, futures, particularly around price action and trading psychology to the next level. Subscribe to the channel. Also leave your comments and feedback below that. Other than that, I wish you good luck trading, and I'll see you in the next video.